Hi, everyone. Welcome to the 139th episode of the Timing Research Show for May 30th, 2017. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing the 192nd weekly report. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com, and you can download this or any of the past reports there. I have Dave Landry back to host today, so I'm going to go ahead and turn it over to him.
Okay, cool. Thanks again for having me back, David Kosmeter, and thanks to Timing Research again for having me back here today. Looks like we've got a full lineup. Everybody here's a veteran. The only person that I wasn't on the show with was Stefanie. So, hey, Stefanie, how you doing?
Hi, Dave.
Let's while we have you up, let's talk a little bit about you. Tell us about, for those of you who don't, for those of us who don't know you, Stefanie Kammerman of the StockWhisperer.com. Great name, by the way. Tell us a little bit about yourself and a little bit about the StockWhisperer.com.
Hey, Dave. Well, great to see you again. Yeah, last time I was on this show, you had another guy. I think Matthew was running the panel. So my name is Stefanie Kammerman, but my traders call me the Stock Whisperer because they think that I have a crystal ball. It's under the desk. Can you get out the crystal ball? No, I really don't have a crystal ball. I'm a tape reader. I've been doing it for 24 years. I started out at the largest prop firm in New York, Schoenfeld Securities. And I started in front of an Instinet machine, which was a green glowing dark pool execution machine. And only the big firms had access to this. And it was from day one that I realized the market moves when the dark pool is buying, it goes up. When the dark pool is selling, it goes down. News, nothing else matters. Nothing. I see insider trading. I've called the last 11 corrections before they happen on social media. It's the same exact dark pool pattern. I see it over and over and over again. So for me, it's all about the tape. There's no fundamentals. I do like seasonality trades, and I'll be sharing one of my favorites coming up in the next section with you. But I run a live trading room all day long. I teach people how to trade while I am doing it live. I call out my entries, my exits, and I don't just call out the trades. I actually explain to you why I'm getting in and why I'm getting out so that you can get educated. So next time you can do this, for yourself. I have a couple hundred traders in my room. It's amazing. We work together. I'm also on tour with the World Money Show, which is where I saw Dave. I'm on tour. The next stop is San Francisco. So if anybody is in the area at the end of August, I'll be there. I'm looking forward to it. So great to be on the show, Dave.
Cool. Great to have you. Mm-hmm. All right, AJ, let's go back to you. AJ Brown, or go to you, I should say, TradingTrainer.com. For those of us who don't know you, tell us a little bit about yourself and a little bit about TradingTrainer.com. Floor's yours.
Hey, Dave.
Good to see you.
AJ Brown here. Been trading since 1997. Specialized on equity options and underlying symbols. And I, too, feel like the best way to be trading the markets is to follow the big money. Very similar to what Stefanie's talking about. And I like that as an option trader, I've got many more tools in my tool chest in order to trade whether the market's going up or down or sideways, whether it's going changes in implied volatility or even just time passing by. So I like being able to look at any pattern and just matching the right strategy. And one of my things is I don't want to be sitting in front of the computer every day. So I like employing whatever automation I can to the point that it makes sense and having more of my time for me. And so that's what I profess to all the Trading Trainer clients. And that's pretty much it.
Cool. All right, Kurt, let's go back over to you, or go to you, I should say. Kurt Capra, T3Live.com. Tell us a little bit about yourself and a little bit about T3Live.com.
Awesome for being back. Appreciate you guys asking me to come on back to the show. So I started out with really just a focus exclusively on trading the index futures. And that was good for a while, but then things started to slow down. This goes back a little while, but things started slowing down and there was just less there was less movement in the market, therefore there was less opportunity on a day-to-day basis, and so as a result started to branch out into different areas. ETFs, got a little more involved with equities, and at this point now do a lot with Forex as well. So kind of just run the gamut there and have a lot of experience under the belt. And one of the things that I've realized in doing so is that if you focus on the technicals, right, if you focus on fear and greed, that's all you really need, because that is ultimately what drives anything you're going to trade. So to what Stefanie said, you don't really need to worry about the news or whatever else may be the headline of the day, but it's really how traders are feeling in response to that headline. And that's what a lot of what we do here at T3 Live is focused on, is how to read those chart patterns regardless of the time frame. And we have trading rooms for that, educational courses for that, in-person mentorships, etc. So that is a heavy part of what we do.
Cool. All right, Christian, you're next. Christian Fromhertz from TribecaTradeGroup.com. Tell us a little bit about yourself and a little bit about TribecaTradeGroup.com. Floor is yours.
Yeah, sure, and great to see you again. I think I was on the show maybe 2 months, I'll say 6 weeks ago. So great to be back on. So thanks very much for having me once again. My name is Christian Fromhertz. I am the CEO and founder of Tribeca Trade Group, which I started over a year ago. My background is as an institutional trader for a long time on Wall Street. I started back in 1998. I spent most of my career at Merrill Lynch. So I was a director over there, and I was a director on their Delta One trading desk, which I always get the question, what is Delta One? It's basically an optionality of one. So it's a lot of futures, it's a lot of ETF products, customized indices. So really kind of gave me a great exposure to be able to trade a whole bunch of different products. From there, my specialty was ETF trading, especially as ETFs have picked up and grown over the last few years. So I was there for over 10 years, institutional trading, and I decided I want to go on my own and basically start my own business, do something a little bit different. And we've been the Tribeca Trade Group has been around for over a year, and I echo what some of the other panelists has already said so far in terms of reading the tape. I do that both on the cash side, mainly in ETFs, and kind of see where the money is going to. I have a particular model that I run to see where fund flows are going into, what kind of nooks and crannies where the market has been going into over the last, I look at that on a daily basis, but I look for trends. And then on a day-to-day basis, we're looking at option flow. So what we're really looking for is trade ideas. We don't always have to take the exact trade that's on the tape, but we go through each trade. So we provide in our all-day trading room, we kind of break down each trade one by one, and I do send out real-time alerts and so forth, but really try to give as much explanation why I like the particular trade. And we basically kind of just sit back and wait for our pitch all day long, and wait when the setup is right, wait to see where we see that really aggressive activity on the tape, and then go after it.
Cool. For those of you who don't know me, Dave Landry here from DaveLandry.com. I kind of started on institutional side, ended up a little bit on combination of retail and institutional side. I have DaveLandry.com is my website where I provide traders education, easy for me to say. Over the years, I've worked with thousands of individuals and several hedge funds, and throughout that process, I learned just to simplify things and keep it simple, and that's what I do in my actual trading. Like Stefanie said, she used the F word, fundamentals. I don't use any fundamentals whatsoever. I am by trading. I think the, you guys call it the tape. The tape doesn't lie. And in my case, I'm a little bit more longer term oriented. I believe you can only predict the short term, like some of you guys in here, but I think you can stick around longer term if the trend develops. And that's where the real money is, in the longer term trend following. Unfortunately, so is a risk. So I use the hybrid approach to money management, where basically I'm just taking partial profits and trailing a stop to make that transition to a longer term trader. I have plenty of special reports on my website and plenty of information. I'll give you some links towards the end of the show for follow up on that. Also have a trading service, which like as Stefanie mentioned, not just throw out a pick, but why I picked a certain stock and follow the trade from the beginning to the end with the trailing stops and taking partial profits, etc. Okay, let's in fact, let's go back to you, Stefanie. Two-part question, questions 1 and 2. Which direction you think the S&P is going to be by the end of this week, based on, I guess, today's open to Friday's close? And rate your confidence to the answer by estimating that you have probably, the probability you have correctly predicted this week's market's move.
So last time I was on the show, I correctly predicted it. I said the market was going to go down this week, and then it was going to go up the next week. And I'm going to be honest with you guys, it's like flipping a coin, trying to guess which way it's going to go this week or next week. What I could tell you is key levels to trade off this week. So I spotted a huge print on Friday on IJR. I don't know if you guys trade that. It's the iShares Core S&P 500 small cap ETF, almost 1 million shares. Don't normally get that much volume on this, and this is like the Russell. So this is definitely going to move this sector. 983,000 share print on Friday at 10 o'clock in the morning at $68.49. Can I share my screen? Just show you that?
Yeah, absolutely.
This is really key. Let me just see here. Screen share.
Now, while she's just for everybody else, the second part of the question is developing events. We will, if you want to share your screen on that part, that's fine too.
Yep. Yeah, it's much easier to just show you. This is my live Vol Pro software. It's phenomenal. I can go back to 2011 and search for any big trade. So this is very unusual. So that's why I'm really pointing it out to you. And I'm watching this key level, so important today. So 983,000, I can like zoom in here and just show you $68.49. Now, just to show you, the overall volume, really isn't that much. Right now it's trading 3 million today. We got another smaller print today on it right here on my block trade indicator, 100,000, same level. So for those of you that trade the Russell key level, I'm going to be shorting this as long as it closes below that level today. I like to give it a little bit of room. So, when you see the S&P 500, haven't seen much dark pool activity on that. It's been really quiet. On the SPY, we're just kind of drifting up on no volume, which happens all the time, right? We've seen that before, especially around holiday time. 240.20 is my key level, though. If we break below that on the SPY, that was at a 19 million dark pool level. If we break below that, then we're going to be going down. But right now, we're above it. So that's my thoughts on the SPY. The Qs have been, really strong. I do prefer to trade individual stocks rather than trading the whole market. I think this market has been amazing past month, just trading individual stocks. As far as next week goes, if I had to take a guess, I would guess down. But again, I could change that at any moment. If I see selling coming in or buying coming in, I'm going to tweet that out. But you're making me guess what the price action is going to be next week, which is like, flip a coin, right?
Yeah, gotcha. And just to everybody else, we have, I call it a new feature. I guess it's been around for a while, trade of the week. So if you have a trade of the week, which Stefanie, I think you already gave us a trade there, throw it out. If not, what I like to do is just show a little technique or something to look for. And It looks like you did a little bit of everything, Stefanie. Okay, let's go over to you, AJ. What direction you think we're going to be by the end of this week? I guess from today's open to Friday's close. I'm not guessing. From today's open to Friday's close, the holidays got me messed up. And then rate your confidence to that. Oh, Stefanie, we need your confidence. So you said down, and what's your confidence?
I would say I'm pretty confident. I'm pretty as long as we stay below the print. If we go above that at the close today, I won't be confident. It's always about the level. I never put myself in a trade. It's all mathematical.
Give me a number. Give me a number.
I'm 100% sure that I will make this trade based on that print level. That's my number.
Sounds like
That's
a plan.
why you're getting out of me. All right.
All right, AJ, back to you. Same bad question, same bad time.
All right. So just to stay a little bit more focused, I'm going to be saying that the market is going to be down by the end of the week. And again, I'm a little bit concerned about the light volume, which means that people are just on the sidelines, letting time go by, watching. And the minute that they jump in, they're going to jump in on an opinion of something. It used to be that I paid a lot of attention to economic news and all of that good stuff that could move the market, monetary policy. But it seems like lately it's whatever comes off of Twitter. If there's a tweet, the market moves. And so my confidence on this level is I'm only going to give you a 50%. And that's because I could see this also blowing up in the up direction. Right now, I just see stall. I see people sitting on the sideline waiting for what next tweet comes next.
All right. Kurt, let's go to you.
Yeah, it looks pretty much like things are just going to be quiet here. Following the long weekend, we got the jobs report later in the week. So if I had to say one way or the other, I would say unchanged, sideways. But for purposes of controversy, for lack of a better word, I'll say higher, just to give a little bit of flavor. Because quite frankly, after, last Tuesday, or Wednesday, market didn't follow through to that big drop, just grinded its way higher for the last 7 days. You got Amazon pushing through 1,000, even though it retreated a bit. So it's like you can make the argument both ways. Why want to just keep doing what it's doing? So
yeah, gotcha. All right, Christian, let's go to you. Same question.
Yeah, sure.
Wait.
I'm going to go close to down the middle, so I'll go higher, but confidence level 60%. And the reason why is, I just think right now it's a couple different factors, but I think number one, I think we're in a stock pickers market. I think the overall, if we're talking about the S&P, it's we've got a lot of sectors that are pointing down every day, and we've got a couple sectors that are pointing up. So it really depends on where you want to be. I'm not for me, I'll always change with what the market gives me, and I'm really not trading the indices at all. I'm looking at them more for barometers. I think the trending sectors, the semis, the tech, are where you want to be. Some of the international areas of the market. But in terms of the overall market, I would say 60%, that we go higher, but I think just as Stefanie said, you can kind of flip a coin with this. One trend that I've been noticing, which I have up in front, which I should be sharing my screen, is, I mentioned ETF fund flows and how I track this on a daily, day-to-day basis and a weekly basis, which I can show you my grand spreadsheet here of over 1,700 names. And what I've noticed is that there's been a lot more money that's been going into international equity ETFs over the last month. Last week was a little bit different. It actually broke a streak of 3 straight weeks where international equities, I'm talking about like ETFs like EFA or IEMG, these are really capturing just a huge amount of inflows on a day-to-day basis. So last week, we actually saw more money go into US equity ETF. So I'm kind of watching to see if that's a little bit of a trend change. Normally it doesn't last long where we see flat flows going, or basically non-existent flows going into US equities, but that's basically what we had over the last month, again taking out last week's flows. But so eventually I think that money starts to move back into the US, and that's why I'm giving you the up for the week and probably up for next week too, because eventually I think that money will be redeployed back into the US that's been kind of sitting on the sidelines, and that's been going into more international areas. That's it.
Okay, I think Dave is having a technical issue. He disappeared there for a minute, so I'm sure he'll be back in a second, but let's move on to question 4.
And that concludes the secret to trading. Any questions? Yeah, I don't know what's going on. It seems like there's a little gremlin here today. Christian, I guess you were just finishing up. I heard the tail end of that, but I think you finished, right, Christian?
That's correct. All yours.
Okay. I'm going to go ahead and I'm going to say up, and then I'm going to share my chart in the next segment. And I don't want to get too far into my reasoning, but first of all, my reasoning is that as a trend follower, if the market is at or near new highs, I'll give it the benefit of the doubt, and I'll show you that in the next segment when I pull the charts up. I do have some of the concerns that Stefanie brought up, and I think Kurt and Christian, you both brought up a few things, and that is these smaller cap issues are lagging a little bit. But I do like the fact that we bounced back, and I'll show you an actual pattern that you could trade off of that in the next segment. So in the meantime, Steph, let's go back to you. Stefanie, let's go back to you. And question 3 is going to be, oh, we already did that. Oh, yeah. Okay, let's do developing events. Question 3 is, what specific reasons do you think the S&P is headed in the direction you chose, which I think was up, but then, okay,
actually, I'm not bullish on the S&P.
Oh, okay.
We're very up thrusty today again. So I'm a short-term trader.
That's
I
right.
day trade, I short-term swing overnight, and I also do long-term trading. I do all of it. I trade stocks and options. It's a bit up thrusty today. The banks, have you seen the banks today?
Yeah.
They look ugly.
Yeah.
I mean, I can't see us. I mean, okay, tech is great. The Qs are strong, but the Russell banks are really, really weak today. We're below a lot of dark pool activity as well on the XLF and Bank of America.
Brokerages are ugly. We're short MS right now. But
yeah, I'm short JP Morgan. So, that chart looks ugly.
Yeah.
I like silver. I've been screaming silver. I've spotted big, huge dark pool prints on USLV. Very rare. If you check my Twitter account, you'll see all the pictures I've been posting. USLV, it's kind of a dangerous tool to trade. It's an ETN. It's 3 times long the silver. Okay, but it's unusual that we get these huge trades and we're above all of them. It started at $11.37, and then it's been continuing up and up and up, and a lot more prints are coming in. 13.18, 13.37 were the last huge prints, and we're trading at 13.85. So, I'm watching that carefully. As far as again, it's specific stocks. To trade the whole market right now, I think is a really tough call. But if I had to guess, I would say down this week. It looks a little up thrusty right now. Like we might start to come down this afternoon.
Okay. AJ, let's go to you. What developing events? Please share what specific reasons you think the S&P is headed in the direction you chose.
And I am going to, again, I'm not going to be too controversial here because I'm going to mimic what a lot of the other folks are saying in that I'm trading individual symbols. I think that's where you're going to be able to pull yourself out from the dreck that's out there. So with that said, I said that the market's going to go down. I gave myself only a 50% probability because there's no volume in there. A little bit of move in one direction is going to cause a pile on, and a little bit of move in the other direction is going to cause a pile on. We are a little bit at the top of where we've been trading, and we've stalled, which we've done in the past. And I'm just seeing by the next 3 or 4 days that we see a little bit of a retracement. Now, next week we could see a movement back up, but right now it looks like we've exhausted ourselves. We're in a little bit of a range contraction phase, and it's heading down by Friday.
Okay. And Kurt, to you next. If you want to share charts, just FYI, feel free to do so.
I can bring up some charts. Just give me 1 second. All right, so everybody's pretty much talking about the same things here at this point. We have some news later on this week. As AJ said, any tweet between now and Friday could warrant some major movement. So there are obviously those things that still exist, and that may just simply keep the market climbing this wall of worry, so to speak. There's no other reason for it to move higher, so it'll just continue to slowly, cautiously go, and at the first sign of weakness, it'll collapse, and then everybody realizes it's okay and moves higher. But, to Stefanie's point, banks are really weak, but we also do have strong transports. You got IYT up here right now, and they, generally speaking, are a good barometer for the economy. You've had rails, which have been strong, airlines, which have been strong. So not to say that IYT is tearing it to the upside here, but it is strong. It tried to move lower here earlier in today's session, popping back up. So now it looks like it may be able to extend up to these prior highs. But again, you've got other areas, other sectors that have also been weak. I think it's going to be interesting to watch the action in TLT bonds as well, just because it's been holding up here. And for as strong as the market's been, it's interesting to see how well this has been holding up. If this continues to move higher, it may just be a bit of a hedge to holding longer term equity positions or just market positions in general. You got the VIX here, which is back to these lows. If it breaks down, suggests we should continue higher. So these are just some of the things that I'll be watching, but ultimately nothing is going to happen, in other words, we can't predict necessarily or forecast what's going to happen next. All we can do is read and react to what is happening and then just follow through on the message. So as I said earlier, looks like we're going to move higher here by the end of this week. If that starts to happen and then doesn't, my bias has to change with the new information. So it's a lot of reading and reacting at this point.
Okay, gotcha. All right, Christian, let's go to you. What developing events, or let me read the question properly here. What specific reasons do you think the S&P is headed in the direction you chose?
Yeah, sure. And I don't have any one particular factor. It's more of a combination of factors this week. So I think this week we've got some economics coming out. We've got ISM numbers. I think that'll be important. ISM is always a leading indicator. We've got some construction spending. So I think these will be something that the market watches a little bit this week. Other than that, we're out of earnings season. So I was saying this to my trading room last week. Towards the end of last week, when we saw 4 or 5 companies, kind of really smash through earnings and have some really good numbers. And I was saying, I haven't seen a quarter where we've had so many companies beat earnings. Of course, there's some trouble spots. Retail is a mess. I echo some of the comments already said about financials and banks. I think banks look like they're a mess right now. I really wouldn't want to touch any of them. The only one that seems to be worth going long is Citigroup, which seems to be outperforming. Stress tests, I think, are going to be interesting. Maybe it's worth a long here. Other than that, I really don't like the financials. Maybe Goldman on the 200-day moving average. Let's see if it holds. But other than that, besides retail, which has been shaky, and which I really think is a paradigm shift, I think earnings have been really, really strong. And I think we'll just need to see that continued pace of things like ISM, things like durable goods coming out. Those need to keep continuing on, and I think if they do, I think that we could expect more to go to the upside. I also very much I'll watch IWM, which I know was already said as a leading indicator. I think what we want to watch for going into June, which we're just a couple days away right now, we've got new value areas, and I think what I'm really watching out is or really looking at is about 136.50 in IWM. You can look at this with IJR2. They're essentially the same ETF, but 136.50. If we open below there, I think we might have a difficult time in June. If we get back above, IWM can continue to churn. We just don't want to see it break down. I also like what's going on in some of the areas of the transports as well. If you look at the airline ETF, broke out to a 52-week high towards the end of last week. So not really bearish there. So, I continue to think that you just have to kind of separate these sectors and avoid some of the ones that look iffy or breaking down, and kind of stay with your trends and the ones that are breaking out.
Yeah, good stuff. I echo a lot of the things that you said there, and I think you mentioned the TLT, and I think that's important too. As far as my saying that we're headed higher, I'm known in the industry as a trend following moron. I just follow along. I don't try to outsmart the market and do all these crazy things. And what I believe in as a trend follower is when a market is at or near all-time highs, err on the side of longer-term trend. And I've been saying that for all of this year, and even November, December. And you can see way back here, we're at new highs, and we went on to make new highs again. And that doesn't mean that it will always follow through. A market only spends 4% of its time, believe it or not, at new highs, and the rest of the time, 96% of the time, it's backing and filling. And that's research based on some research that Greg Morris has done. But the point is, err on the side of the longer-term trend unless you have some sort of signal telling you otherwise. And then recently we had a big slide in the S&P 500. I didn't get too excited about that. I wasn't happy about it, don't get me wrong. But we stayed in the range and we didn't break down. Now, if we broke down, not once, I hope that's not a Freudian slip, then we would likely get some signals to the downside. But for now, continue to follow along. If you take a look at the NASDAQ composite breakout bar here recently, and that's going to be my, I'll flesh that out in a little more detail later, but I have 2 webinars that I did recently. They're both on YouTube. You can find them on the homepage of my website, where I talked about this pattern. Sometimes you have a very strong trend, and it always amazes me, something as simple as a big wide range bar against a trend. If you go long above that bar, it usually tests out very nicely. And if you're wrong, you put in a stop below the bar and you just dust yourself off and move on. But so far, so good. Now, the fly in the ointment, as both Kurt and Christian and I think Stefanie especially talked about, which has me a little nervous, she saw a big print in there, is the IWM. And as you can see, it's been stuck in an intermediate term sideways trend for all of 2017. As long as the bottom of the base holds here, I'm not going to get too excited, but I sure would like to see it break out and move higher. And as you go through these sectors, the good news is a new guy comes along every so often, like now it's defense stocks broke out today notwithstanding. Have come back nicely, but there are some areas like energies and metals and mining just look absolutely abysmal. You see how the big blue arrows pointing down there. And then transports looked a little iffy just about a week ago, but now they're breaking out to new highs, at least based on the Morningstar industry group. I think Kurt or Christian was showing the IYT, which doesn't look quite as good as this one, but you can see this helps to confirm so far so good in the overall market. And if you take a look at semiconductors today, for instance, they're breaking out nicely to new highs, big blue arrow pointing higher there. So the point is, overall, it looks pretty good, but there's always something to worry about. And there is some deterioration internally, and the small caps are lagging a little bit. But for now, I'm going to continue to give it the benefit of doubt. And as I think Kurt or Christian just said, so far the market continues to climb the wall of worry. So far, so good. So that's why I'm going to just go ahead and stay with the long side for now. But as Stefanie pointed out, banks are ugly, and we're short Morgan Stanley because it looks ugly. We're not rushing out and putting a lot of shorts on. We have 1 short out of 5 positions we have on now. But other than that, we're going to just stay long and follow along for now. All right, speaking of Stefanie, let's go back to you. Question of the week is, let me just read it to get it proper. What advice would you give and or what resources would you recommend to someone who is new to trading?
That's a really good question. And as many times as I say play paper trade until you can prove to yourself that you know what you're doing, that your system works, most people don't listen to that. I mean, yeah. I've asked crowds of hundreds of people, how many of you paper traded over the, for 2 years before you put your first trade on? And not one hand goes up. I say, how many of you done it for 1 year? Nobody's hand goes up. That is the problem. Most people are gambling. This is not gambling. This is high probability trading, risk versus reward, and you need education. And I think, everybody on this panel is an educator. There's a lot of great education out there. Find somebody that you can relate to. There's different trading rooms out there, and, and you'll connect with somebody you really, really like. And if you don't like it in one room, try another room. There's a room for everybody. And, I have a trial. You can try mine out for 30 days. It's only $9.95. And again, it's an educational room. I do audio meetings and I'm teaching you, while I'm trading. And I think that is the key. You can't teach somebody how to trade when the market's not open. Oh yeah, do this, this, and that. And you need to teach somebody while it's actually happening. You see, I'm buying it right now. Why am I buying it? Because it's moving. See that? See the refreshing on the bid? That guy's adding to the bid. I'm actually teaching as it's happening. And that's how you learn. Not by reading a book, not by watching TV. That's not going to teach you. I didn't learn how to do this in college. I was very fortunate to sit in the $1 million room at Schoenfeld Securities where I had guys, I knew nothing. Guys took their time and taught me how to trade while they were trading. And I'm going to tell you guys, it was the luckiest and best thing ever to happen to me. And I absolutely love teaching and helping other people. So please respect your money. All right, this is not gambling. Respect it and really take the time to learn. You cannot learn how to do this in a day. And if somebody tells you that they can teach you, buy my $20,000 course and I'll teach you how to trade in a week or two, run, okay? Because it doesn't work like that. If you want to train with me, I'm going to work really, really hard, but you're going to work really, really hard with me. I'm at my desk at 6 a.m. every morning, all right, watching the tape. So if you really want to learn, I'll help you out.
6, you sleep in.
I am a cool nerd. Cool nerd.
All right, no, I'm at 5:30, but that's a good point. If that you definitely could be successful. Somebody asked me a while back, like, what do I do if I have a day job? And I'm like, well, wake up a couple hours early, study for a couple hours, and then go to work. But I don't want to digress too far. Let's go to you, AJ. Good words of wisdom there, Stefanie. By the way, I want to come back and circle back to a few things you said. But AJ, what advice would you give and what resources for someone who's just started out?
Definitely echo everything Stefanie said, especially with respect to paper trading. And I've had the same exact experience. In fact, some of my higher end clients, I've actually made it so that they don't know whether they're paper trading or real money trading because I put a buffer between them. And I'll decide based on how good they're doing whether we throw real money at it or not. And you really remove, I agree. But back to my question, I think in addition to what Stefanie said, I would say focus on learning money management skills. When to liquidate a position, when to let it run, and how to calculate that in advance. Because what I'm teaching as well is making sure that you're balancing your risks. It's way more important than looking at the rewards, but balancing your risks. That's a big deal, is making sure that you're not betting the whole farm on one particular trade, that you're not betting at all, you're actually analyzing through, and that you're actually managing your risks. It's not so much about the win-loss ratio as it is what you do with your winners and what you do with your losers. I've seen folks that are, only winning about 30-40% of the time, and they're still at the end of the month way ahead. So money management is where I would say you need to put some focus.
Yeah, amen on that. Kurt, let's go to you.
Yeah, I mean, I would have to mimic most everything that's already been said. It comes down to getting an education with whomever you feel is most suited to your style, and to that point, it's not necessarily about who you see making the most money, because that style may not mesh with what your style is ultimately going to be. For me, I had a mentor and was learning how to trade off of 1 minute charts, tick based activity charts, and yes, the method worked, but my personality wasn't set up in a way that I wanted to be that active, or I wanted to be looking at that fast moving a time frame. So I had to understand that and move out to a little bit of a larger time frame to just fit with what was comfortable. And so, again, I think that's a big mistake that people make, is they just focus on, oh my God, this guy's making X number of dollars, I'm going to do what he's doing. And then they come and find out they can't. So you have to find what works for you ultimately, but at the end of the day, it always comes back to an education. If you want, yes, you can, if you have deep enough pockets, learn through the school of hard knocks, but who wants to do that? Anybody that gets skilled in anything gets an education in it, and trading is no different. So that's where I stand.
Yeah, good stuff. Christian, let's go to you next. Same question.
Yeah, sure. And those were really, really good answers, and I agree with everything that was said. I'll just kind of add a couple points here where I can. And the whole thing about going into a new room and I see a lot of times people try to follow other traders thinking that they could just replicate the profits, and it doesn't work that way. And the other thing is, as long as we all have been trading, this is not, it never gets easy. And I think from what we all said, hey, do we think the market's going to go up or down this week? We're all basically like, well, yeah, we don't know. We can kind of flip a coin in any particular given day. But I think what kind of separates the good traders and everybody who's in this room is we're talking about having a trading plan and making sure that, hey, you're not just going out there and buying or selling a whole bunch of stocks. You're really analyzing each situation. You're looking at each trade and you're looking to see how it fits in your whole portfolio. So, always looking at the risk. People always take a look at the upside and they don't actually look at how much they can lose out of trade. So, where are the trades not going to, where are they not going to go? Now, where are they not going to work out? As I think it was already said, when you look at win and loss percentage, no one is going to have 80 or 90% winners, and it's more about letting your winners run and taking small losses. So, being very, very disciplined, having that trading plan, and sticking to it. That's one of the hardest things. People really get off the rails in terms of not following a trading plan, or not having one at all to begin with. So, paper trading I think is good, but even just trading, trading the minimum quantity. So for option trading, sometimes, I tell our traders, hey, trade one lots until you're good at it. This way you can kind of see, how it's progressing and be able to get out of, bad trades quickly and let your winners ride. So again, it's, what everybody said was great. So wanted to add a little bit to what I can there. So thank you.
Yeah, no, good stuff. And one of the complaints about this show is there's not enough controversy, and looks like we're not going to have it this week because, for the most part, I agree with everyone here. Good points were brought up by all. I could probably talk for about 8 hours on the subject, so let me just try to wrap it up. First of all, I have a little 5-minute video on the homepage of my website right now, which pretty much sums it all up. No one knows exactly what a market will do. As I often say, not you, not me, and certainly not the guy who screams on TV. Now, that's pretty liberating if you think about it, because it means that the small guy actually might have an advantage in some particular cases. In fact, you could actually get into more inefficient markets. That's one thing that came up a lot today, is that there's better opportunities in individual stocks in the overall market, and I fully believe that. And that's a whole other conversation. But you need to understand how markets actually work, and people buy and sell stocks for a variety of reasons that often have nothing to do or anything to do with the underlying company. And you have to learn that. From a psychological standpoint, the real world and the trading world are two different complete worlds. And we're not made to trade from a physiological standpoint and from a psychological standpoint. There's this little thing in our head called the amygdala, which makes these emotional decisions, which doesn't really work well when it comes to trading. So you actually have to take little tips and tricks to kind of avoid that, kind of tiptoe around the amygdala, as I often say, to get to the rest of which sloshing around up there and avoid all these emotional decisions. Like Stefanie pointed out, it's amazing to me how many people will risk so much money in real markets and not get educated. You don't have to spend your money with me. Just go out and find somebody, like I think everyone said here today, that makes sense to you, and follow them. I would encourage you to keep it really simple. If you can't trade simple trends and recognize simple patterns, you're not going to do some more complex option strategy or whatever the case may be, some sort of arcane wave counting method or something to be successful. AJ pointed out money management, very, very important. If you lose 10% of your account, you have to make back 11.11%. If you lose 50% of your account, you have to make back 100%. I think around 90%, you have to make back 9,000% or 900%, whatever it is. It grows geometrically. So very important to get educated. Like everyone here, I'm sure you guys have a lot of free information too. I've got tons of free information. You don't have to spend your hard-earned cash to get started. Learn my system, or learn whoever else's here system, Stefanie's, Christian's, Kurt's, AJ's, whoever. And if it makes sense to you, then follow along. Point out is it also has to fit your lifestyle. Traders make good traders, as far as I'm concerned, as far as my approach to the market. I'm slotted as a swing trader, meaning that I go in for 1 to 2 weeks or so, but I'll actually stay with positions as long as they move in our favor. We have some we put on in February that we're still tracking or staying with, I should say, via a trailing stop. But find out what works for you. Make sure you can do it. I had a client who was also day trading, and he was carrying a laptop from room to room, and that's just not going to work. So make sure it fits your lifestyle. In my case, again, I find busy traders make good traders because they don't micromanage themselves out of good trades. And then also make sure whoever you're following, and again, it doesn't have to be me, make sure there's a repeatability factor to it. You might find this great trader who makes all this money, and he might be making 100 trades a day, and by the time he's getting out, you're just getting in, and it's too late. So make sure you can repeat what they're saying to do. There's no hindsight involved or some sort of tricky execution that you have to get done. So repeatability is huge when it comes to trading. And again, I can go on and on, but I have I've got 500 articles, videos, free reports, and then I think I have about 1,500 YouTube videos out there. So lots of stuff to get started with cheaply on my website, and I'm sure everybody else here has a lot of good stuff too. All right, do any of you guys have, let me just throw up a chart real quick. You guys have a trade of the week. Stefanie, you already gave us one. If you want to reiterate that, that's fine. Let me just show you. I don't have a live trade because we have some positions that, or some potential positions that have it triggered, but let me just show you what I was talking about. And again, I did 2 webinars on this over the last couple of weeks, and you can get them on YouTube. And all we're looking for, and again, as I think you guys said also, I prefer to trade individual stocks, but every now and then you will get a setup in the overall market. And all we're looking for is a very solid uptrend, and ideally a persistent uptrend. And notice that the market basis, the Qs went up day after day after day. And we had this big knockout move. And what happens there is shorts get attracted in, and then they get spit out if it triggers. And then the nervous Nellies, the people that'll dump their position on you, the people that bought right at this high, who are very nervous money, the scared money, so-called scared money, dump their position. Once these guys get shaken out and the shorts get sucked in, you can look to enter right above the high. And if you have a nice wide range bar down like this, you could put a stop in right below the low. And again, if you go to my website /videos, or if you go to timing-research-special offers, I have tons of content, free content on that page, and one of them is a video on this particular pattern. So that's your pattern. This would be your risk from the top of this bar to the bottom of this bar, and you would project that out, and it would actually be hitting that initial profit target right about now. And then from there, you move your stop to break even, and then trail that stop higher, and hopefully stay with the position. I know I said hope. You're not supposed to say that in trading, but hopefully stay with that position for a long, long time. All right, Stefanie, let's go to you. Do you want to reiterate what you said about, I think it was in IWM?
No, I got a lot of stuff, but that was relevant to the entire market, to the Russell. This is small cap ETF. That's unusual. So watch that level. Right now, we're just sitting like right on it, but we'll see where we close. A lot of noise during the day. But every morning I put out a free YouTube video called The Whisper of the Day. It's my hot stock pick. So today it was bullish on Apple above 153.80 and really 154. There were pretty big prints on Friday, and we've broken above that 154 level. Also, JWN spotted a big print on Nordstrom's on Friday as well at $42.50. So I'm bullish above 42.50 if she can close above that today. That was this morning's whisper. You can watch the video. And here's a bonus. I'll be putting it out in a couple days, but I like Procter & Gamble. It's got seasonality, which is, if you look up the seasonality chart, it's ready to explode, and it's got prints at 86.50. So those are just some of my picks. I got a lot more, but I think we don't have enough time for that.
All right. Well, we got our money's worth. Thank you.
Yeah.
AJ, let's go to you.
Yeah.
Do you have a trade of the week or?
Yeah, of course I do. Right now, what we're doing at Trading Trainer, I actually just released 6percentprotocol.com. We're just focusing on kind of under the radar things that are going to move sideways that I can sell some premium again, focusing on just 6%, making it compound nice for us. I'm going to share my screen just really quick because this is one that we have been trading for the last couple of months. Schnitzer Steel, and it's just quiet doing what it's doing. and we just did another premium trade on. Basically, we're doing, we purchased a Leap out in 2018, a little bit deeper in the money. And then we've just been selling premium at the money, near-term premium, and we just did one for June 16th. And I like these quiet stocks, and when you do it against a Leap like that, you're looking at just over double-digit returns, a little bit better than 6%, and then I get to go in between.
Did we lose AJ, or is it just me?
Yeah, we lost him.
Yeah,
Okay.
I think he cut out.
All right, well, let's go to you, Kurt, while waiting on AJ to come back. You have a trade of the week. We got 2 Kurts now. We got 2 Stephanies. Yeah, look at that. It's crazy.
Can you hear me?
Yeah, we can hear you.
All right, I got kicked out of the room there for a second. Or you want to go back to AJ? I see you just got back in.
Oh, how much? Did I just talk to myself?
A little bit. No, we got the Schnitzer, I think. Do you have anything to add to the Schnitzer?
Did you get to the part where I just placed the trade against the Leap and sell at the money near term? Okay, and then I take a moment. I'm planning on spending a week in Sardinia and doing some scuba diving, and then be back when that trade's ready to expire.
Cool. Sounds like a plan.
Yeah, that's my place.
All right, Christian, Kurt, did we finish up with you? I don't remember. We had
Nope.
We were seeing double. All right, let's go back to you.
All right, let me get the charts up here. Hold on one second. All right, so the first one, I got a couple here. The first one is MAS. This is more of a longer term idea. Been consolidating here for basically the last month or so. So, I mean, basically what I'm looking at here is if it gets above 37.50, it's got a real good shot at moving higher. If we go to the weekly chart, you can see it had this really nice wide range bar up, igniting the move higher. It's been holding there. And if we just scale this back, I mean, there's really nothing to the left. So it's got clear air overhead. So this one looks good over, again, that daily range of, call it 37.50. That'll look real nice. Then also like Whole Foods, WFM, had a deep pullback here, but it's sitting on this support right now, coming into the 50-day moving average as well. So I'd like to see it hold here a little longer, even try and move up once, fail, come back and give us a retest. And I think that would set up a nice opportunity in the Whole Foods. Then, just as kind of what I alluded to earlier, a bit of a hedge, just looking at TLT. If it breaks over basically today's high, I think it's got a good shot at moving significantly into this void from where it moved down at the end of last year. So that offers a bit of protection, if you will, playing TLT. And then, like I said at the beginning of this, I do focus a lot on Forex as well. And so I like the Euro pound. If it closes strong here today, you can see we're getting a nice bottoming tail action with action right at the highs of the session. So if it closes strong here today, I like it over that high for a move at a minimum back up to this prior high, and even through that with further upside potential there.
Cool. Is that a daily chart you're looking at?
Yes, this is a daily chart.
Okay, gotcha. Christian, have we gotten to you yet?
We have not, so okay. I am ready.
Yeah, with all the glitches, it's kind of confusing. So, all right, good. Go ahead. Floor's yours.
So yeah, I actually wanted to echo Apple too. We've actually been seeing for the first time. I actually have not owned Apple since before they reported. There just hasn't been that much flow that we've been seeing in terms of, it'll go in waves where we see a lot of call buying. And today we're actually seeing some call buyers kind of step in a little bit today. to some Apple. It's not really performing that wonderfully today, but we are seeing some buying going on, which we just haven't seen in a while. So I like that idea. The two ideas that I was going to talk about, two quick ideas, just more longer term trades, is one in robotics. There's the Robo ETF. And what I have on the bottom of my screen is something that you just can't see in single stocks, and that's real buying and real selling. So all these green bars, this is money going into this. And I was talking about how I monitor inflows and outflows in ETFs. You can see all these green bars here on the bottom of the screen. This is inflows. So it's a newer ETF, robotics and automation ETF. And you want to stick with the trend. So I've been long in this robotics ETF and just riding the trend. Is it a little bit extended above the 50-day moving average? Yeah, a little bit. But so I think on any dips, the last dip that we saw on the 50-day moving average was a great buying opportunity. And take it for what you see on the bottom of the screen here. This is all inflows. So this is a newer area of the market that's become very popular very quickly. This is just in the beginning of the year, and you could see all these green bars. It's had one outflow, and the rest have just been all inflows. So really a lot of growth in this ETF. This ETF, and if you break it down by companies, which is what we do in the trading room all day long, but iRobot, ISRG, Raven Industries, who just had earnings about a week ago and just had awesome earnings. CGNX, a couple other names in here. Holly's in here as well. Some of these names have had really good earnings, and it's always interesting to see some of these names that have almost gone parabolic. They've had good earnings, and they kind of will sell off for about a half a day, and buyers just come right back in. They start rushing back in. So on an individual basis, we go through these names one by one and look for the aggressive call activity. But I think you could just own the ETF, especially if you don't have any preference to some of these names, which have kind of gone, not hockey sticks, but have gone exponential. Some of them in their returns. The other one that I like is the China Internet ETF. Just similar situation. A lot of buying in this one. I just took the chart away, but. If you look at NAV screen, you can see that there's been a lot of buying going on. This is, they don't talk about this too much on CNBC, but you look at performance, they'll talk about left and right, the politics and the Trump policies and what are we going to do? Are we going to take that next leg higher? I mean, take a look at the performance in China Internet, which I can't find the year to date. There we go. Year to date, up 40%. So, why I've been a big advocate of stocks going up, because it's been going on globally. Yeah. So this has just been, as some of these names have had earnings the last couple weeks, they've kind of come in a little bit. I'm hoping this comes in just a little bit further, maybe to the 20-period exponential moving average. Again, this is the KWEB ETF, so it's all names like Alibaba, JD.com. Momo, which has seen some call buying. So it's just about to come in here to the 20-period exponential moving average. I actually started a position in this today. If we get a little bit further, move back here to this trend line, which is again 20-day moving average, I think it's a great place to get involved into the ETF. As long as it holds, you got a little bit of a ways down to the 50. So I think as long as it kind of hangs in here around the 20, that would be a great place to get involved. If it breaks here, that's your exit at that 20-period moving average. But again, looking at this ETF, and I'll just bring up the components and then I'll leave it here. But you could see, Tencent, which has been performing amazing. Baidu's in here as well. I mean, all the names that that have been really had a lot of momentum into them this year. Two individual names that I like is probably Wuba. This one has not gone as crazy, just very easy entry and exit. Just crossed the 50-day, or excuse me, the 200-day moving average. You got a golden cross. So where this would go wrong is if it breaks the 50-day moving average. But I think you want to stick with what's going on here and be long against the 200-day moving average.
Okay, cool. I like the KWEB and the Robo look pretty good as far as persistency is concerned, and that's what I was talking about earlier in the NASDAQ composite. So again, I'm not going to leave you with a trade of the week, but keep an eye out for persistent markets, whether it's an ETF or an individual stock. And again, I think your real advantage is going to be in the inefficiency in an individual stock. But if you see an ETF that's set up like the KWEB and the Robo, when that has a trend knockout, like I just talked about in the Qs and the NASDAQ itself, I think that could be a good pattern. So we're going a little long, so let's go ahead and wrap everything up. Let's get closing thoughts from everyone. Stefanie, any closing thoughts or anything else you want to tell us about StockWhisperer.com?
Yeah, well, my number one rule is no thinking. So I can't really tell you my thoughts. When I'm working close, I can talk about stuff. No, you can find me at www.thestockwhisperer.com. I'm really excited. We're going to be coming out with a dark pool app. In fact, we are beta testing it. Today's the first day. And it'll be available in just a couple weeks. For those of you that can't sit at your desk, don't want to sit at your desk all day long, I'm going to do all the work for you. I'm going to search out all the unusual trades, and I will do push notifications right to your phone. Not only just the dark pool trades, but also how to trade it, levels to be bullish and levels to be bearish on. But for those of you that would like to sit with me all day long, tell jokes while I'm trading, sometimes I sing a little bit. It's my other career. It doesn't pay as well as the stock market, but you know, boring days, if I have to break out into a tune, I will. But I do meetings all day long. We have options, stocks, futures, Forex. My traders trade everything. And we specialize in catching the option chain off guard by following the dark pool on the underlying asset, the stock. That is really, really the key. This is how we make 200 to 2,000% ROIs when the option chain has no clue what's coming. So we buy them really, really cheap. We do these trades all day long. So if you want to learn, you can come see me at www.thestockwhisperer.com, and have a great day. And thank you so much, Dave. Great words of wisdom.
Glad to have you here, Stefanie, and glad to have you on the show together. All right, AJ, let's go to you. Any closing thoughts? Anything else you want to tell us about TradingTrader.com?
Yeah, guys, come and check out the 6% protocol, 6percentprotocol.com. And also come check out my blog and get all that free information at tradingtrainerblog.com.
Cool.
That's all I've got.
All right, Kurt, let's go to you. Any closing thoughts or anything you want to tell us about T3Live.com?
Yeah, for sure. I mean, thanks again for having me on the show. Always enjoy hearing what everybody else has to say as well. But, you know, if you want to get more information, you go to T3Live.com. You could even go to T3Live.com/blog and check out the free educational content pieces that we're putting out there as well. You know, but ultimately, I think what it all boils down to is the ability to stay objective and read what's happening, not get caught up in a bias, and just go with the flow. So,
yeah, I agree. That makes a lot of sense. All right, Christian, let's go to you. Any closing thoughts or anything else you want to tell us about TribecaTradeGroup.com?
Yeah, sure. And I like what Kurt just said as well. You know, I mean, I think everybody's so fixated on politics and so forth. So just watching price and being unemotional is difficult for some people to do, but I think that's the correct route to take, especially in this environment right now, because I think people are really, I think it was mentioned as well before, you know, people are watching Twitter and so forth. You know, as long as you're staying with the trend and defining your risk, that I think is the best course of action to take right now. Tribeca Trade Group, you could check us out here. If you want to see that weekly flow report that I mentioned in the beginning of the presentation, you can go right to our website. Also, we're running a special this week. You could actually check out our room for free this week. So you can email me. My email is cfromhertz@gmail.com, and I'll go ahead and give you the link for that. So thanks again for having me. Always a pleasure to be on this panel. Always great opinions and advice and recommendations. So I really enjoy being on here, and have a great day, everybody.
Yeah, Christian, glad to have you back. DaveLandry.com. I'm just going to wrap it up quickly since we're running kind of late. This is the URL that'll get you to a bunch of stuff that I mentioned, and I need to shorten it someday. It's timing-research-special-offers. But I was talking about a video that talked about the money management and psychology and how nobody knows exactly what the market will do, and that's right there. You can watch that on this page. I also have, I think it's still in here, $100 gift certificate for anybody who's just showing up. So you can get all three of my books in ebook form for that, and you could reuse gift certificate as many times as you want for one per product, obviously. So that's one way to get started pretty cheaply. And then if you scroll down, there's plenty of videos on that page. So learn if it works for you. If I click with you, fine. If not, there's a lot of other people out there doing really good stuff, such as these people here today. So check it out. Again, thanks, everybody. I'm going to let David go ahead and wrap things up since we're running a little late. David, back to you.
All right. Thanks, everyone. Great show. Just want to remind everyone watching, be sure to hit the YouTube subscribe button so you can get updates on future shows. Also, be sure to go to TimingResearch.com. You can download any of the past reports or watch any of the past show episodes there. Be sure to join us next week. We'll be back on Monday, June 5th, with Steve Lentz, Glenn Thompson, Anka Metcalf, Sam Borgi, and Rob Hanna. So just want to thank all my guests again for this week. Stefanie Kammerman of thestockwhisperer.com, AJ Brown of tradingtrainer.com, Kurt Capra of T3live.com, Christian Fromhertz of TribecaTradeGroup.com, and Dave Landry of DaveLandry.com. Thanks, everyone.
Thank you, David.
Thank you.
Thanks, everyone.